Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about AUD USD because at the moment we do have quite interesting price action and structure. Now, starting here on the monthly time frame, what we can see in fact is that the market at the moment is approaching a very strong level of previous monthly support, which is now turned resistance. From here, all this move to the upside was created, the market then broke below the zone, and at that point, all that previous support was turned resistance here. So what we actually have here is a market that is retesting previous monthly support and resistance, and we could expect a potential rejection to the downside away from that zone. We can also notice how we did have an impulse and correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market has already retraced to the 0.618 of the Fibonacci taken on the monthly impulse, which is a very strong resistance level that most of the times the market will retrace to before then printing a movement lower. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market has now, in fact, printed a very strong impulse to the downside, followed by this correction. At this point, we could expect more potential bearish price action to be developed away from this area. But in a situation like this, in which the correction is as strong as the impulse, there is always the possibility the market actually here has created a new impulse to the upside. And what you will see in this case is most of the times a movement lower and a rejection higher, essentially for the creation of a W formation. So what you could expect is a bit more bearish price action rejecting the monthly resistance and then a move to the upside. That is definitely a possibility here. Specifically, if we consider this as a new impulse and this is a new correction, we can also measure that potential correction by placing our Fibonacci from the low to the high of this impulse. And what we can notice is that, in fact, the market has just has the possibility to retrace to the 0.32 of the Fibonacci taken on this impulse and has just started, in fact, this retracement. Now, dropping down on the daily time frame, what do we have? Now, from a daily perspective, this is where things start getting very interesting because what we can notice is that the movement in which the market created this move to the upside and is now starting this move to the downside is in the form of creating an M pattern. In fact, we have moved to the upside, retracement, the market then starts creating a continuation, however, then it fails. And if from here we will see more bearish price action at that point, we would essentially have the creation of this M pattern. And we also know that this horizontal ray that I have placed here is the 0.32 of the Fibonacci taken on that weekly new supposed impulse. So this would be a very interesting area because as we know, after the creation of an M pattern, the market is supposed to create a move to the upside to go and complete the M pattern at the previous support turn resistance, which is the completion zone of the pattern itself. Meaning that if here we will have this move to the downside, at that point there is a good probability from here to see the market create a potential rejection higher and complete the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, we can notice how with the last reports, net positions have been once again increasing. We went from minus 51k to now minus 44k net positions. So overall, what we have seen here is that shorts got decreased from 83k to 77k from an institutional perspective, and longs got slightly increased from 32k to 33k. So there is definitely the possibility if the market will create this M pattern for a rejection higher and completion of the M pattern at the neckline. So if the market actually creates this move to the downside, inside of here, how we could be approaching this potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our lower and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this M pattern at the neckline. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.